record. So welcome again, Krishak, to the call. He's going to take you through asset classifications today. So again, get something written down, a pen, piece of paper. The notes are invaluable. So Krishak, the stage is now yours.
Hello, everybody. Thanks a lot, Shazia, for this wonderful introduction. Well, happy to be back and restarting the first session again of the new series of 6 sessions. And I do see a few new faces here. Well, let me first introduce myself since this is the first session. My name is Krishak, and I'm in the markets for about 6 to 7 years now. It's been about 6 to 7 years that I've been trading full time. Been successfully trading full time is what I would say, because there are, of course, a lot of people out there who are in the markets, but eh, some are in break-even stage, some are successful, some are still trying to figure it out. So yeah, I can say that yes, I am a successful trader, being in the markets for about 7 years now, knowing the ins and outs of the market, and this is what I'm here to give out as to how to figure out a different asset class. Now, when we talk about asset classes, there are multiple and number of asset classes. Depending on your risk, depending on your end goal, what's your goal for the year? What's your goal for the next 5 years? What's your goal for the next decade? You get to decide your asset class. So I'm going to briefly go over each and every asset class, help you understand which asset class is better than what, and according to your risk, which asset class would you want to get into? Let me present my screen just a second. Share.
While you present your screen, I'm just going to say shout out to the women that have joined, because it's usually less women, more gentlemen that come into this field. So I always like to emphasize that. So thank you. Thank you to the guys as well, but special thank you to the ladies.
It's good to know. Perfect. Uh, I think my screen is visible. Yes, looks like my screen is visible. Just a second. Okay. Okay, it's visible. Okay, perfect. Let's start with the classification of assets. Let me increase the text. All right. Classification of assets. This is going to be the main focus for the session today. Now, when we talk about assets, let us give 1 minute to everybody and sort of ask them what are the different types of assets they are aware about. I hope the chat box is open for everybody so they can drop their answers in the chat box. The question is for all of you is how many asset classes are, how many asset class are there in finance? I can see the chat. Okay, let's give it a minute and then we can take it from there.
You should all be able to pop your message into the chat box because I've enabled it.
Anybody knows different types of asset class, what anybody has been investing into, if anybody's into trading that's been trading right now, uh, which instrument, which asset class are you currently looking at? What are you trading? And if it, is it a good asset class for you according to your risk, according to your uh, goals that you have decided for the year or for the next year? Asset means property. No, asset means property is a different thing. Again, it is also an asset class, of course, but asset class in finance meaning stocks, equity, correct, cash, equities, forex, commodities, ETFs, which is exchange traded funds, stocks, so on and so forth, right? So there are different asset classes. So when we talk about asset class, Mr. Sufyan, it's not just about property. Property is also an asset, of course, but that is more into real estate. That's more of real estate investments. But when you generally talk about asset class, it's more of understanding. the markets, right? Which is the equity market, the cash market, stocks, forex. Can we say gold? Yes, gold comes under commodity. Gold comes under commodities. Crypto is also an asset class. Let's move on. Saima says crypto. Yes, that is correct. Now, when we talk about asset classes, we have stocks, we have commodities, we have foreign exchange, also called as forex, we have crypto, we have ETF, exchange traded funds. These are the different asset class that we can look at, and there's something called as bonds as well. A lot of people have heard about bonds, but they don't exactly know what bonds are. We're going to touch base on what bonds are as well. So these are the different asset class. Let's start with the most basics, which is the stocks. Let's start with what a stock is. Stock is nothing but share of a company or shares of a company, right? Stocks is nothing but shares of a company. So when you look at the stock market does fluctuate, right? The stock, and how does the stock market fluctuate? Oops, just a second. Okay, how does the stock market fluctuate? With the forces of supply and demand. What is supply? Supply is for the sellers and demand is for the buyers. If there is high demand, the price usually goes up, and if there's high supply, the price usually falls, right? So if there is high demand, what happens? Everything goes up. The market goes up, which means the US economy is doing really good. There's more investments coming into the US market. Um, but then if there is more supply, meaning there is not a lot of um, cash coming in, or there's not a lot of investment coming in into the markets. What is the case? Why is there not a lot of investment coming in, and why are people selling? Is there could be multiple reasons, like weak job data for the US, interest rates increasing, um, inflation increasing, right? These are some of the fundamentals that can impact the stock market in the short term. But when you look at the stock market now, you have two choices, whether you could make short-term investments or you can make long-term investments. Depending on what your end goal is, as I mentioned, if you would like to trade in the markets, so you could trade the stock market. If you would like to invest in the market, you could also invest in the stock market. It is not only limited to investing and it is not only limited to trading. You could do both the things depending on what your end goal is. Let me take this off. Okay. Now, there are thousands and thousands of companies in the stock market, right? And one of the famous stock market is called the NYSE, New York, New York Stock Exchange, which is from 9 a.m. Sorry, 9 a.m. 9:30 9:30 a.m. Eastern to 4 p.m. Eastern. This is when the stock market is open Monday to Friday. You're open, you're open to you're open to open a new position and close your positions between these trading hours from 9:30 a.m. Eastern to 4 p.m. Eastern. This is the time when when the market is open, you can trade the markets, you can invest in the markets, you can adjust your positions, you can buy more assets, you can sell assets, so on and so forth. Now, when we talk about investments, the best investment in stocks, depending on your style of investment, right? Now, for example, for me, I'm more of a person who likes to take conservative risk when it comes to stock market. Conservative in the sense that I only invest in top 10 companies in the world, in the US. This is for investing in a way where you're investing in more established companies in the US. meaning you're investing in Tesla, you have Microsoft, you have Apple, you have Nvidia, um, what are the other companies, so on and so forth. Google, Alphabet, also called as Alphabet, so on and so forth. So these are your investments where you're investing in established companies, and the stock is not going to crash in a way that the company will file for bankruptcy, so on and so forth. So this is more of a conservative investments, and this is what I do in stock market, being on the conservative side of the markets, right? Now, when you look at stock market, it is long-term investment is more of fundamental analysis. What is fundamental analysis? Understanding numbers. Fundamental analysis is more of a numbers game. Numbers game, as in you look at the annual reports of a company, annual reports for a company. You look at earnings. If the earnings are negative, positive, you look at PE ratio, price to earnings ratio, PB ratio, price to book ratio, PS ratio, price to sales ratio. You look at a lot of ratios like this, right? Meaning that it is always a numbers game. And this is only for long-term investment. This is not something short-term. So let's say, for example, if you invest in the top five companies that I've mentioned right now, you are now basically invested not for a year, but for more than 3 years, 4 years, 5 years down the line. And you could also sort of keep compounding your investments. Uh, every month you could invest X amount in your portfolio. You could add X amount in your portfolio, which would technically grow your investment even further, right? Now, how can you do that? There is something called as dollar cost averaging. This is a very important thing in investment. It's called dollar cost averaging. What is dollar cost averaging is investing X amount every month, irrespective of how the market is moving. The amount is fixed. When you do dollar cost averaging, your amount is fixed. Let's say, for example, if you plan to invest, let's say about $1,000 every month, your $1,000 should be segregated amongst five stocks, so $200 per stock. So it is divided equally amongst the five stocks that you have selected or amongst 10 stocks that you have selected to invest, right? This is dollar cost averaging. What happens with dollar cost averaging is you're investing in a consistent manner. And when you look at compounding, compounding is all about consistency as to how well do you invest or how much money do you sort of put in every month. So dollar cost averaging is a very important concept, and this is what I use. This is what I use personally, because again, it has given me returns that I was not expecting by the end of the year, or even for the past couple of years that I was not expecting. And this is because of dollar cost averaging, irrespective if the market is trading at its all-time high, irrespective if the markets are crashing. Make sure that you invest your money wisely in the stocks that you have selected without fail, because if you miss a month, the calculations is going to go haphazard. Then you will have to start the calculation all over again and sort of come back into the routine. This is one way of investing, which is dollar cost averaging. And this is only for long term, folks. Keep in mind, this is only for long term. This is not for short term trading. The next way to look at it, oops, I selected the wrong tool, just a second. The next way to look at it is investing, investing large amount when market goes down significantly. What do I mean by investing large amount when the market goes down significantly is I'll give you an example. Let's say you're looking at Apple. You're looking at Apple stock. Apple stock is trading somewhere at about 300 US dollars. Just to give you an example, let's say, for example, Apple stock is trading at 300 US dollars per stock. Now we have Trump. Let's say Trump announces something in the markets. Let's say he says that the US has put 100% import export duties, tariff on China. What happens? The market goes down, right? Now, the US is putting tariffs on different countries. This is what has happened in the markets in the past couple of years. When the US started to put tariffs with different countries, the market crashed by 21%. What does this mean? Apple stock might have gone to, let's say, 240 US dollars a share. From 300, it might have gone to 200, 240 US dollars a share. What happens? You're getting a discounted price to enter. You're entering at a discounted price. When you enter at a discounted price, you can technically put in large sum of money at this price, and then you don't need to focus on dollar cost averaging for that particular month. But you still are investing. You're still investing, right? As the market starts to stabilize, you can go back to dollar cost averaging. You can then slowly start pushing back to dollar cost averaging. But for the particular month, you can follow this strategy where you invest large amount of money when the market goes down, uh, when the shares of the company are traded at a discounted price. Uh, so this is again, uh, I do both of the things depending on how the markets are moving. If the markets are going up, if there is any fundamentals happening, for example, Trump tariffs, interest rates are going up and down, how heavily it can be impacted. So these are the things you could sort of play around with depending on your end goal. Again, the more aggressive way, dollar cost averaging is a more conservative way. Investing large amount, the second option is more of an aggressive way. So you could find balance between both of the strategies wherein you could use dollar cost averaging, but if you feel that no, the market is has dipped significantly, this is a good time to put in, instead of investing $1,000 every month, you might just invest $4,000 in one go, saying that no, this is a very good price. I want to invest more than what I usually invest. You could do that as well, right? Just bring in $4,000 and invest it into the top five or top 10 stocks that you have selected into in the markets to invest. For trading, what about trading? This is for investments. I hope investment is clear. Any doubts, folks? Uh, any doubts? I don't see anything in the chat box. Okay, good to go. Thank you. Thanks, Emma. Thanks, Sufyan. Think we're good to go. Okay, let's look at how can we start trading in the stock market. Now, when it comes to trading, you would like to trade in a market that is very transparent. When you trade the stock market, you have to look at the fundamentals of each and every company. If there's any earnings coming out for the particular stock, is there anything happening? Are they launching new products? Is there any news release that's happening for the company? So again, when you look at a particular stock for trading, it is very difficult to trade. Very difficult to trade, right? But you could be in for some short-term investments. So trading for so it could be, instead of trading, I would label it as short-term investments, which are investments which are less than a year. So you're in for a couple of months, I would say. Right. Now, when you say that you're in for a couple of months, you're using leverage. You have options to use leverage. If you want to use leverage, you can use leverage. If you don't want to use leverage, you can skip on leverage as well. What is leverage? A big question that a lot of people ask me is what is leverage and how can you get leverage? Leverage is nothing but free money in the markets. Very simple. What is free money? Does the broker or does the market usually give out free money just like that? No. Let's talk about the regulation first and then we jump onto the leverage. Let's say the US let's talk about the US regulation. Since we are talking about the US markets, let's talk about the US regulation. Stock market falls under the regulation called SEC, United States Securities and Exchange Commission. This is the regulation for the US, where if you open up an account with any of the broker, Fidelity, Vanguard, Charles Schwab, Thinkorswim, any broker you can think of, they should be regulated by SEC, right? Now you can legally trade the stock market, wherein whatever trades you place, how much of amount you deposit, withdraw is all tracked by the government or the regulation. Just to be on the safer side of the market that the broker does not do anything. So this is the regulation SEC, right? Where your money is sort of safeguarded in a way that you have a lot of opportunities to trade, and you can sort of just dabble around in the markets. Now let's talk about the leverage. Leverage is nothing free money, or we could put it as buying power, right? Now under the regulation, the broker offers a leverage of 4 to 1, meaning, for example, let's say you have a trading capital of 100 US dollars. Now you have a buying with leverage, you have a buying power of 400 US dollars, meaning you can buy anything worth up to 400 US dollars using $100. Why? Because of leverage. 4 to 1, meaning for every dollar, the broker gives you a leverage of $4. So the broker gives you $4 to trade for every dollar. Meaning if you have a trading capital of 100, you will get 400 as your buying power. If you have a capital of 10,000, you with leverage, your buying power will be $40,000. 100,000 trading capital, 400,000 will be your buying power, so on and so forth. So why this leverage? Why does the broker give you leverage? Is because when you have a buying power, you can place higher bets. You can place more risky bets. You can buy more quantity, right? You can buy more quantity. You can buy more number of shares. You can diversify your assets. You can buy different stocks. So you're not limited to just buying one stock, one share, or with only the trading capital you have. So there's of course a pro and a con when it comes to leverage. Um, so when it comes to leverage, let's talk about the pro. What is the advantage? When you look at the leverage, what is the advantage of using the leverage advantage is diversifying stocks, right? Meaning you can buy more stocks, meaning you can buy different stocks, right? With just by using $100, now you have $400 technically, but can you withdraw $400? You cannot withdraw $400. Disadvantage, high risk, but high risk, high reward. With leverage, you have higher risk, you also have higher reward, meaning you risk more, you gain more. Very simple. If If any of the trades that you have invested, let's say you invest in, let's say, 4 stocks, for example, but now your balance is going negative, right? From $100, it's going below. Now it's $50, $10, and so on and so forth. Do you have to pay $400 back to the broker? No, you only have to. The loss that you incur will be deducted from your trading capital, which means when your trading capital goes close to 99, 98, negative 99, negative 98, your trade will be closed out automatically. Technically, you don't have to pay anything extra to the broker. The broker will say, okay, you have lost money. You don't have to pay anything to us. You don't have to pay the leverage. The leverage amount, $400, goes back to the broker, and the loss that you incur will only be $100. If there's a question by Sufyan, if I have maximum need to leverage company charge and swap, company chart, if I have maximum need to leverage company chart and swap. Swap for FX are very different because now I assume this is what you're asking for Forex, Sufyan. Swap is overnight charges. Swap and leverage are very different. Leverage is buying power that the company, sorry, that the broker gives you. Swap is very different. Swap is something that you pay to the broker to keep your position open overnight, which means to keep your trades open overnight or for the next couple of weeks. So swap is charged overnight. There's an overnight fee, and that is called swap. Oh, so you're asking for spread. Okay. Okay, swap is different, spread is different, leverage is different. Okay, you're asking for spreads. Spread is the difference between the bid and the ask. I'll write this down for you, Sufyan. Spread is the difference between the bid price and the ask price, right? This is the spread, meaning what is the bid price? Bid price is for the buyers, ask price is for the sellers, right? Who creates the spread? The spread is created by somebody called as the market makers. We call them MMs or market makers or liquidity providers, also called as LPs. In short form, we call them LPs who provide liquidity into the markets, right? So if I have maximum need to leverage, does the company charge in spread? No, the company will not charge you in spread. Spread is something that you pay irrespective if you have leverage or no. So spread is irrespective, right? Because think any of the assets, any of the asset that you're trading, Sufyan, think of it in a way that you're trading or you're in an auction market. When you're in an auction market, you have a buyer and a seller, right? And the difference, the price difference between the buyer and the seller is technically the spread. Let's say I am the buyer and you are the seller. Let's say your selling price is $100, but my buying price is $90. The spread is $10, right? So that is the spread. So spread is very different. I hope that's clear. All right. Any doubts with leverage, folks? Any doubts with leverage? Any doubts with investments, short-term and long-term investments? If not, we can move forward. Let's give it a minute. Let's see if there are any doubts. All right. I don't see anything, Shazia. We can move on.
See, I
Okay.
don't see anything either. I just see understand. It was Sufyan's question. He said he's clear now. So that's great. Anybody else have any questions? Please do put them into the chat. Even if it's a comment, anything is always good learning.
All right. I think we can move on. Uh, this was a brief understanding or a detailed understanding of what stock says. How would you sort of trade the markets? Keep in mind, leverage is only for trading. The last comment before we move to a different asset, you can write this down, folks, is leverage is only for trading, not for investments. You will not get leverage for investments, for long-term investments. Your leverage is only for trading because you're in for a short term. You're not in for a long term. Let's look at commodities. Let's bring commodities down. Let's look at what commodities are. Commodities are precious metals. What are precious metals? Gold, silver, copper, oil, etc. These are precious metals, right? When you talk about precious metals, um, what are they used for? Why commodities is used for trading and investment, both. We'll deep dive into the section as well. When we talk about the commodities, what are the advantages of commodities? Is strong reaction to macro news. like interest rates. What are macro news? Interest rates, inflation, um, job data, so on and so forth. Anything related to the economy of the US or for a particular country. What is the disadvantage? Highly volatile means there is a lot of price fluctuation and it is heavily news driven or mac news driven in the sense, let's say if the President Trump says we are going to put 100% tariffs on China, what happens? Gold skyrockets, stock market goes down. This is what it means. Commodities, let's talk about gold. Gold is called safe haven asset, also called hedge against inflation. Why is it called hedge against inflation? Is because when the US economy is down, when the US economy is down, stock market is down, stocks down as well. What happens? Everybody will put their money into gold and gold goes up. This is how the commodity markets are driven is depending on how the US stock market is, how the US economy is, if there are any fundamentals coming out, news related events, as I mentioned, go commodities are heavily news driven. They're highly volatile. Gold's been up about 66.6% for the year, by the way. Just in case if anybody wanted to know how's gold performing, gold's been up by 66.6% for this year of 2025. I'm sure a lot of people must be holding gold and they must have made good money on gold. Okay, let's talk about gold and silver. A lot of people might be interested in trading these assets, gold and silver. You could invest in gold and silver without leverage, meaning you could keep buying it. You could also do dollar cost averaging for gold and silver. You could do that as well. What we spoke in the stock market section where you do dollar cost averaging for stocks, you could do this for gold and silver as well. For trading, on the other hand, is very volatile and 24 hours market. Commodity markets are 24 hours market when we talk about trading. It is open round the clock. It's only shut for 2 hours when you transition from it's only shut from 4 p.m. Eastern to 6 p.m. Eastern. That's the only time it's shut for the 2 hours. It's because it marks the start of a new day in the Asian markets. That's when you see Tokyo markets open, Sydney markets open at 6 o'clock Eastern, 6 p.m. Eastern, 7 p.m. Eastern is when you'll see Tokyo markets open, Sydney markets opening. So it starts the mark of a new day. So gold and silver is a very good asset to trade, high volatile, high risk, and high reward as well. But make sure that when you're trading a commodity like gold or silver, focus on, not focus, but keep an eye on the news. You have to make sure that you look at the fundamentals and you see what the news is coming out as. You have to keep an eye and see what the news is, if the interest rates is high, low, if there's anything happening in the US or in the European Union, in the UK, in the Asian markets, or anywhere around the world. So, because as I mentioned, gold is fundamentally driven, it is a news driven asset. So, it's very important to sort of keep an eye and see how the asset is performing. But in bad times, like when the US economy is not performing well, when the markets are down, when the dollar is down, it is inverse. Now, gold is inverse correlation of US dollar, meaning if USD is down, gold goes up and vice versa. Sometimes market is against in news, that's correct. Yes, sometimes uh, the market is against the news, meaning they don't really just consider one particular news, as I mentioned. That's why you have to look at the overall economy of the US as to how the economy is performing, job data, inflation, interest rates, home sales, home loans, n number of data. See, another question, news on sites like Forex Factory, I'm sure there must be other sites. Yes, Forex Factory is one of the best sites to look at for news. This is one of the best sites to look at for news. There is another website called FX Street. FX Street is another website, and this is for um, fundamentals, for news, for technical analysis, for fundamental analysis. This is a very good website as well. Um, I do look at both the websites because Forex Factory is more of a numbers website where you have specific numbers. But FX Street, thanks Shazia for bringing this up, bringing the link up, makes it easier for everybody to look at it. FX is a website, FX Street is a website where you see how different assets are performing, how stock is performing, how commodities are performing, how Forex is performing, how crypto markets are performing, so on and so forth. So make sure that you look at both the websites before making any decisions online, before buying any asset or before selling any asset, because it's very important as well. Any doubts with commodities, folks? Well, sorry, forgot to mention leverage. Leverage, depending on the broker now. Now I have a leverage of 20 to 1. It can fluctuate between 10 to 1 to 20 to 1, meaning your trading capital, you have a trading capital of, let's say, $100. Now your buying power, you have a buying power of 1,000 US dollars. 100 into 10, 1,000 US dollars, right? So this becomes your buying power. You can buy any asset worth $1,000. What was the leverage for stocks? 4 to 1. For commodities, it is about 1,000. Sorry, it is about 10 to 1 or 20 to 1, depending on the broker. But it is about 10 to 1 for uh, commodities. The best leverage, I agree, Sufyan. This is the best leverage to sort of trade when it comes to commodities. Now, does commodities in the US come under SEC? No, it comes under different regulation called CFTC, which is Commodities and Futures Trading Commission. This is under this leverage, under this regulation, CFTC, you have commodities, Forex, and crypto markets. These three asset class come under CFTC, Commodities and Futures Trading Commission. Only stocks come under SEC, Securities and Exchange Commission. Other than that, the different assets that we are talking about comes under CFTC. An interesting thing is actually all the assets that are under CFTC are 24 hours. Crypto markets are 24 hours, commodities are 24 hours, Forex is also 24 hours. All the assets under CFTC regulation of 24 hours. So the markets are open 24 hours around the clock, but commodities are open 24 hours, 5 days a week, Monday to Friday, 5 days a week. FX is open 5 days a week as well. Crypto, whereas, is open 7 days a week. This is the only asset class in finance that is open round the clock. The markets are open, the markets never sleep. Crypto markets are the only markets that never sleep. They're open round the clock, 7 days a week. Any doubts with commodities? Just to give you a quick overview, what commodities are, they are safe haven assets, hedge against inflation, If US economy is down, stock is down, people are very fearful to invest in the stock market. They find a better asset to invest, which is commodity. So they jump onto commodities like gold and silver, oil, natural gas, and this is what they invest, and this is where they start compounding into the markets. Any doubts with commodities, folks? Make sure to look at the website Forex Factory and FX Street. Shazia has already put the link, which makes it very easy for us to just click on the link and look at the websites because it is a very important website. Both the websites are very important to look at for you to make trading decisions. Of course, investment and trading decisions as well. Thank you so much, Shazia, for bringing the link up again. Thanks a lot. I appreciate it. Mm. Sufyan says everything's clear. I think we're good to go, Shazia. We can take another quick topic before we wind up.
Sure, we've got about 12 minutes. And guys, if you have any questions, girls, guys, please put them into the chat because then at least we know that we can hold on to that amount of time to respond. Otherwise, we'll keep going. Thank you, Krishak.
Thanks a lot, Shazia. Right, I don't see any questions. Mr. Abdul says you have listed five companies at the start. Let me bring that up. Okay, you have listed five companies at the start. Any other you'd recommend, or would that not be your place to say? No, of course I can give out recommendations, Mr. Abdul. When you talk about investments, now this is for my personal investment again. Because I'm a very conservative investor, or I'm very conservative at risk when I look at the stock market. I'm more aggressive when it comes to crypto markets and forex markets. I'm super aggressive in those markets. But when you talk about stock market, I like to invest in the top 10 companies that are listed under the S&P 500, right? So if I open the S&P 500, I'll quickly show you the S&P 500. You could see the top 10 companies. Just a second, bear with me. Okay, there we go. This is S&P 500. S&P 500 is an index that tracks the performance of the top 500 companies in the US, and this is what I have invested in, the top 10 companies in S&P 500. There you go. Largest holdings. These are the top 10 companies. Let me zoom in. I know the chart is a bit blurry. Just a second, bear with me. I'm gonna zoom in for you so you can see the screen a bit clearly. Okay, there you go. So this is what I have invested in: Nvidia, Apple, Alphabet, Microsoft, Amazon, Broadcom, Meta, Tesla. I've not invested in Berkshire Hathaway, not even in Illy, LLY, Walmart, yes, JP Morgan, of course, it's a bank company, Visa, yes, Oracle, MasterCard, and Palantir. So around about 10 to 12 companies is what I've invested in. You can try to shortlist companies from this list. You can go to S&P 500 index. This is the index, S&P 500 index, and choose top 10 to 15 companies. Easy way to compound your portfolio, easy way to diversify. Or another way to look at it is also going sector wise. If you would like to focus on sector, let's say you want to invest in 10 companies, for example. Um, let's say you wanna invest in 10 companies, for example, right? Uh, how could you do is you could go sector wise as well. You could say that, okay, you want to take three companies from tech sector, you want to take two companies from defense, you want to take three companies from AI, you want to take two companies from real estate, you want to take two companies from oil and gas, two companies from fintech, so on and so forth. So you can mix and match according to your personal risk management, what's your end goal, so much and so forth. But I'm more of a tech focused guy right now. I'm focusing more on tech sector and AI because that's the hype that's been going around all over the internet. Just going with what's going over the internet. But yeah, so this is something that you could look at as well. I hope that's clear, Mr. Abdul. Very easy to use for X Factory, but please explain if possible FX Street news. How do I understand? FX, it's very easy to understand FX Street. You just go on the website. When you go on their website, you have like a lot of news, so on and so forth. So it's, it's just like a scroll through newspaper for you. So it's like a digital finance newspaper for you where you have a heading, you have a big header, and you could sort of click on the header and the article pops up. So it's very simple. It's like a digital newspaper, but um, in finance. I'll mainly be doing long term and taking the DSS strategy, dollar cost averaging. I'd say appreciated. Thanks a lot, Mr. Abdurrahim. Yes, go for the dollar cost averaging strategy. It works the best. But in case of any big fundamental or global news events like Trump tariffs, pandemic, interest rates, so on and so forth, make sure that you leave dollar cost averaging for maybe a month or two and try to invest more money because your average price will be way lesser now because you're investing huge chunk of money. Let's say your average price, let's say $300 a share. You could bring that average price well over 270 to $60 a share, depending on, of course, just giving an example. But yes, you could sort of give more importance when the markets are going down. 100%. Any particular web link for everyone to click on S&P? There's no particular link to click on S&P. You could just go online and type S&P 500 index stocks and the whole link pops up. I'm currently looking at this is TradingView. This is what I look at. This is TradingView. Uh, yeah, so when you look at TradingView, it gives you a big list of all the assets that's been going on here. So yeah. So this is TradingView that I use. TradingView is a platform I can type it in. TradingView. There we go. Thanks a lot, Shazia. Yes, this is the right one. Invesco, how to invest in S&P 500 in the UK. Yes, this is the right one. All right, let's keep moving forward. Let me zoom out of the screen. Bear with me just a second. Okay. I think we can take one small topic, Shazia. Is that fine?
Yeah, we've got just a tiny bit of time. I'm just putting links in. Helps me
Sure.
remember them as well. Opens up on my computer.
Of course.
Market
All
Watch
right.
is also one.
Market Watch is a very good one. Yes, Market Watch is a good one. Invesco is what you have put. Invesco is a very good one as well. All right, let's take a very small topic called bonds. Any idea what bonds are? Anybody knows what bonds are? We'll give it a minute. What are bonds? Anybody? Any idea what are bonds? No? Okay, let's move ahead. Bonds is nothing but it's a loan that you give to the government. Strange enough, you usually get the loan from the bank or from the government as an individual. But now what are you doing here? You're giving a loan to the government, a state, a city, or a company. Oops, or a company. When you give them loan, what do they promise? Of course, they have to give out something. You're giving them money, right? You're putting liquidity into the markets. They have to give out something. What do you get in return is they pay you interest. They pay you interest in return or return your full money, which is the principal amount, on a fixed date. It is also called maturity. It is called maturity. Return your full money principal on the fixed rate, only the principal, right? Principal meaning how much you have invested and on a fixed date, and that's called maturity. There are different kinds of bonds. One is called US Treasury bonds. These are government bonds. So these are the bonds that are given out by the government. So you invest money and then they give you interest, or they sort of give you the principal amount back on a fixed date called maturity. US Treasury bonds are very safe because it's a government bond. It's given out by the government, usually used during recessions or when stock market is uncertain. Or when stock market is uncertain, right? The next is the next is corporate bonds. Corporate bonds is usually issued by the companies, issued by the company. Types, there are only two types. One is investment grade bonds, which is safe but low returns. And the second one is high yield bonds, risky but higher returns. Risky but higher returns. Why do some people might prefer corporate bonds over government bonds is because higher interest compared to government bonds. Corporate bonds, it's given out by the company, so of course the company pays out higher returns. The next one is municipal bond. Now, what is a municipal bond? Is again issued by the US states, cities to fund projects, to fund public projects like schools, roads, hospitals. As an investor, a lot of people usually focus on US Treasury bond or they focus on corporate bond. These are the two bonds that people usually focus on. One is US Treasury or the corporate bonds. A very few people focus on this one. A very few, I've seen a handful of people focus on this particular bond. Everybody likes to, get high interest. They want the principal amount back, which the government usually promises to give them. So, yeah, corporate bonds or the U.S. Treasury bonds are usually what most of the people invest. I think this is a good time to sort of close, Shazia. Let me know if there are any
Yeah, I
questions,
mean, I
folks.
don't see any questions, but if there's any questions, please feel free to put them in the chat box. And let me also just quickly remind everybody that this is the sixth series webinar session. This is session one. We will have next week, the 11th of December, the 18th of December. Then we will not have a session on 25th of December. We will not have a session on the 1st of January, which I guess you probably gathered, but I thought I'd remind you. And then the remaining three sessions will happen in January, the 8th, the 15th, and the 22nd. So do encourage yourselves and your teams to come on because you never know, these sessions, these recordings may not be coming on YouTube. So if you snooze, you lose. If you join live, you get it for free. So again, I want to say thank you to Krishak for his fundamentally in-depth knowledge that he shared and started with the topic right at the start with classification of assets. What do they say? If you don't know the foundation of what you do, you can't build a strong building, right? So that's why we started with this. Thank you to everybody who joined. If you have any questions, you can email them to hello@myqminds.com as well. But everybody, most of you have my number or connection anyway. So anything to say, Krishak, before you close? Again, if you are interested in really going into 2026 as an independent trader, it is possible. It doesn't matter where you are. Krishak, you had one of our co-founders, and I think his son is also trading with you now. And they really
That's correct,
started
yes.
as very newbies. So where have they gone from where they started in the last 2 to 3 months till today? Just to give a little bit of a case study before we close.
Sure. Well, Mr. Maher, who's the co-founder of my QBN, has sort of reached to a point where he does his own analysis. He shares charts with me. We do talk about charts. Now he's the one who sort of tells me, "Hey, this is what I have seen. This is the opportunity that I've seen in the markets," and I was very happy with the progress that he's been making. On the other hand, Malik, a very young person, a very young guy, he's I think 18 years old. He's excelling in the markets right now. Just I think in about a month's time, I would say a month or two is when it's just been about a month or two that I have been speaking to him, and he's already on the verge of transitioning to a live trading account, trading with the live money just in about 2 months. So that's very impressive. And you as well, Shazia, you'll be joining
I'm
in
putting
the month of
myself on the
Jan.
hot spot because I'm going to start in January with the view that when International Women's Day hit in March, I can take a small group of women through some live charts as well and handhold to show them I started from zero and I was able to get to this stage. So I put myself in a public challenge now, and there you go. So thank you everybody for
Amazing.
joining. As I always say, it's only one decision. If you can, you are right. If you can't, you are right. Only you have to believe in yourself. So if you really want to kick off trading for 2026, make a difference in your skill set and diversify your income streams. It's not immediately something you would do, but it's a start. You've got to make a decision. And that decision can only be made by you. So have a good evening and good afternoon wherever you are. And if it's a morning, good morning, because I can see Bilal. Bilal, is good morning for you. And we shall see you next week, same time, same place, 6 p.m. UK time. Thank you, Krishak, again for this wonderful session. And we look forward to connecting again. Thank you all.
Thanks a lot, folks. Thanks, Shazia. See you. Thanks, folks.